Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. As we look back on yesterday, we did not see a lot of activity. We did see weakness early on as the markets rebounded throughout the session. The S&P finished down 0.01, the NASDAQ down 0.6, and the big story continues to be the small cap as it is unwinding big time, down 2.8%. And I'll go through the Russell tonight in the coverage. But there overall wasn't a lot to talk about in yesterday's market action. It was really very lackluster, and it appears that market participants are waiting for the infrastructure announcement that's supposed to happen on Wednesday. Good news, we'll be on a live stream, and maybe we'll see some reaction to that. But I've been talking to you about the expenditures that the government's going to do. We did the 1.9 trillion stimulus bill, it was called anyway. Not a lot of stimulus in there relative to folks getting money, but there was plenty of money to be spent around on projects across the country. Now this one is rumored to be like a huge infrastructure. I think this is somewhat of a Trojan horse. They're rolling this in, floating these ideas out there, 3-4 trillion. I've said this before, there'll be another 4, 6 or more trillion that they're going to be talking about. They're going to do this as fast as they can, get it out there, see how the markets respond to it. They're going to continue to talk a lot about the stimulus, and in the backdrop will be the talk about increases in taxes and other elements. I've talked to a number of our institutional clients. They're seeing a lot of estate planners go to work and starting to look back almost as far back as the Clinton era. They're going to roll back a lot of laws and definitely get rid of anything that looked like a tax cut under the Trump administration. So there's going to be a lot of shuffling of the decks. We're going to see a lot of things start to happen very quickly. And I believe over the next couple quarters, it's going to get very intense. But as we also look at yesterday, one of the things that happened is the 10-year started off somewhat benign and moved up to 1.72. And I think this is going to come in as a factor again. We should see 1.76, maybe 1.78. If it gets above 180, I've talked about this number before, it's going to get pretty intense, and that's going to put some pressure on the markets. Also in yesterday's video, I talked about the RTX sell that happened on Friday. We did see a sideways action, and overnight it's very quiet again in the futures. Not a lot going on, and I'll go through all the details here in a minute. The only other thing to really discuss tonight is the output of our database. We're continuing to see on the short-term database a rotation back into markets. We've moved up about 28%. I'll go through all the details here in a few minutes. But the two reports coming out is the consumer confidence up, expected to show 96.3 reading, and then the housing pricing index is going to come out as well. That's expected to continue to show some upward price pressure in real estate, primarily due to the inventory issues that are out there, as there's just virtually nothing for sale right now, whether it's existing or new homes. The inventory is very tight. So let's go ahead and take a look at the charts, see what they're telling us for Tuesday. As we begin with the WaveTech overview, as I mentioned in the opening comments, we are moving back into the markets on a short-term basis. We saw 881 new buys, 189 sells, so there's a bullish rotation happening. We're now up to 28.86% bullish. The next number we'll be watching is that 42 number, and I do expect to see this continue to get some extra traction here. Until we get above 42%, we're likely to stay in somewhat of a very low momentum rally. If we are able to move higher, or we're just going to be locked into a sideways range for a number of sessions. Now, it's possible with this holiday week that we're going to see some covering up before on Wednesday, as we'll see the window dressing coming in. I'll update that again in tomorrow night's video, but there's not really a lot to look at here from the database other than we are seeing a slight positive rotation. As I review the S&P 500 futures, we are up 3 handles right now, 39.61. We traded basically in the range that I expected yesterday, S2, R1 type pattern. We didn't quite reach R1, and we traded just below S2, so the low was 39.28 and the high 39.71, S2 39.33, R1 39.79. But as we look at today's grid, what we're going to see here is the expectation is for at least an R1. There's still some downward pressure that's possible here to trade back down to the 10-day moving average, 39.26. That's S2 for today. There's still some probabilities there. We're not seeing any increases or any momentum building in the PPMs. They're very neutral. And this is likely to stay like this, I think, for a couple more days. Maybe Wednesday we'll see a pattern set up that we're going to move out of this zone. But overnight we're seeing basically low volume, 58,000 contracts traded, and the key numbers to watch for today, the pivot numbers, will be R1 and S2. If we do get above R1, then we're going to print back up towards that 39.88 level, which would be an all-time new high. And that would set the tone for looking at the 4,000 handle. So I think we're going to just grind in here. There's still a slight upward bias overall in the trends, but there's nothing really looks like it's ready to roll today. We'll just have to watch these pivot numbers for a clue. As we look at the SPX, yesterday's low 39.43. The S2 numbers 39.44, so basically a hit off S2. R1 39.88, the high was 39.81. So we're going to continue to, just like in the futures, obviously, we're going to move up toward this upper end of the range. If we get through R1 today, then we're on our way to the 4,000 handle, and you can see the numbers. R2 is the 4,004 level, so I do expect that if we get through that level, we will be able to run a little bit. It's looking like we're going to have another lackluster session, but those will be the pivot numbers. The S2 number and the R1 level will be the key levels to watch, and we could see some acceleration out of here, but the PPMs, just like with the futures, are very neutral. Next market I'll cover is the NASDAQ. We're down 19 handles right now at 12,924. We look at the market grid for today. You'll see that S1, 12,884, low 12,905. So we're just about printing an S1. R1, 13,004. My expectation for this market is for it to remain above the 21 period moving average, 12,861, which is above around the S2 number, between S2 and S3. I don't see the market's getting much below that level. And if we can get back above the 10 period moving average at 12,929, then look for possibility of an R1, R2. The configuration suggests that we're still in this sideways range, likely to stay between the 21-day moving average and the 40-day moving average, and the extreme at the 40-day is that 13,145, which maps out really good to an R3. So expect just a sideways trading range. There's no clear direction that's being generated by PPMs other than the fact that we're in this sideways range. And I've been talking about this. I still expect to see the NASDAQ set up a bottom sometime here in the next several days and move toward an all-time new high. And it won't be until we get well above that 13,145, 13,200 is the pivot number. The next market I'll cover is the Russell. Yesterday's action, we were down 2.83%. We traded down almost to the STX number. We traded just below the S3 number, 2,164, low 2,158. The extreme was 2147. So we held that level. Overnight, we're seeing the futures with a slight bid. They're up 0.54, up 11 handles overnight. So we're looking at some rebound here. If we look at the market grid for today on the cash market, we're going to see that the R1 number is 2174. If we can get above that, then 2191 to 2209. I want to take a look at the spread chart for a minute. The spread chart continues to decline. It's not going to be able to establish itself with the Russell taking back control and leading the markets like it has since going back to November of last year. There's going to be a lot of sideways movement. I think there's still some downside in this spread, which suggests that the NASDAQ is going to be outperforming at least for the next several weeks as I see it right now. Hey folks, if you enjoyed this content, make sure you subscribe, hit that like button and the notification bell so you'll know when I do these videos.